So if you're anything like me and a bit of a nerd when it comes to personal finance, you'll know that I'm always looking for ways to maximize my money. And one of the quickest ways and best ways to do this is to know that in the long term, I'm reducing my fees and charges to the lowest point possible. Thankfully, with a bit of research, I've managed to pull together a list of the best index funds which track different markets around the world and found the lowest cost ones you can invest in here in the UK. So whether you use Trading 212, Freetrade, Hargreaves Lansdown, AJ Bell, Interactive Investor, or any other major broking platform, so I'll give you everything you need to be able to find these today on the different platforms. I'll make sure you get their ticker symbol and their name so you can search for them and add them to your portfolio as you see fit. As you may already know, here in the UK we don't necessarily get access to all of the amazing other ETFs spread around the world, especially some in the US market. A lot of this is due to different laws and different reporting and different tax regulations, but either way, the market that we get access to is pretty incredible and there's plenty out there. Anyway, I've put together a really effective list here which tracked all the major markets. We'll be looking at the FTSE 100, the US market, global trackers, and then also the emerging markets too. And really importantly, I'll make sure that you know whether a fund is accumulating or pays out in dividends, because of course that's really important. Those funds that accumulate will reinvest your profits, and those funds that pay out in forms of dividends will give you that money in cash for you to then make a decision on how you reinvest that. And that all depends where you are in your investment journey and where you are in life, whether you want that money or whether you want to reinvest it for more growth. So let's start right here at home and look at all the index funds which track the FTSE 100, which, if you don't already know, are the largest 100 companies listed here on the London Stock Exchange. Just to remind ourselves here of key criteria, obviously we want our index fund to actually track the index. It's no good having 250 companies in a FTSE 100 fund. So firstly, we need that tick in the box. And then secondly, the biggest thing here really, if all other variables taken out of consideration, really making sure that our costs are the lowest possible they can be. So here are a couple of major funds that track the FTSE 100. I'll put them on the screen now. The first one, as you can see here, is the HSBC FTSE 100 UCITS ETF. This has a ticker symbol of HUKX. Also, critically, the most important thing here, ongoing costs, annual charges are 0.07%. Another one here for you is the iShares Core FTSE 100 UCITS ETF, also charging fees of 0.07% with a ticker symbol of CUKX. The only real substantial difference here, as I just mentioned before, is that the iShares one is an accumulation fund, meaning that it will reinvest any dividends that it's paid. And this is really important on the FTSE 100 market because, of course, although it's not a rapidly growing market and a bit stale, it does have some high-paying dividend stocks. And of course, that will just get reinvested. And of course, all this means is you can take advantage of the amazing effect that is compound interest. So these are two super low funds that you can invest in. And of course, the only real decision is whether you want some money as income or you want to reinvest it. And that's going to depend entirely on your current situation, depending on whether you actually want money for income or you want to extend your growth over the next 10, 20 plus years. Right, well now let's hop over to the pond and now look at the big boy, the US market. In the US, the main index and probably one of the most important ones that we'll talk about is the S&P 500, Standard & Poor's 500 top companies based on market capitalization in the United States. As you can imagine, there are an absolute ton of index funds which cover this market. Ever since index funds were created in the 1970s by Vanguard, of course, these things have exploded. So let me just put a couple of options on the screen now for you that are really cheap, and we'll go through them now. Firstly, you'll see the Invesco S&P 500 UCITS ETF, which has a ticker symbol of SPXP. This is your accumulation version of the fund, and then the distributing version is the Invesco S&P 500 UCITS ETF DIST. You're looking for the ticker symbol there on SPXD. Now, both of these funds have a super low cost of 0.05%, which is incredibly cheap. And if you just compare this to 20, 30 years ago, when some of your charges and brokerage fees would have been through the roof, this is incredible. And of course, as we all know, will add up over the years. For full transparency, I'm a big investor in the S&P 500, but I'm not invested in these ETFs. My preferred fund is actually one that's available on Hargreaves Lansdown platform, and this is the Legal & General US Index Fund, and this has a fee of 0.06%, so these are technically a little bit cheaper, but the difference that I'm invested in is a fund versus an ETF, meaning, of course, when I invest money, I can invest whole numbers and not have to worry about the cost of an ETF. Now let's spread our horizons globally and think about funds which track the entire world market. And these funds are some of my favorite funds because they can give you exposure to the whole world market, meaning that you can invest every month, set and forget. It's a great strategy for beginners and even professionals and pros alike who just want that full exposure to the world. One of the most important things about global tracker funds, of course, is that they'll keep adjusting themselves and keep changing their weight depending on how the global market changes, versus you trying to manage your own portfolio and trying to change and balance it up as the years go on if, for example, your FTSE 100 fund overperforms and suddenly you need to sell some of that to then buy into more of the US market. A global tracker does all of that for you and doesn't really cost a huge amount of extra money. Now, there's a couple of nuances when it comes to looking at the all world and how we measure the all world, and it depends whether you use the FTSE index or the MSCI index. And of course, the way they treat emerging markets and the way they treat certain countries is slightly different. So I'll first just dive into one of the FTSE ones, and you'll be no surprise here whatsoever that one of the most popular ones and the cheapest one is a Vanguard All World FTSE ETF. What we're looking at is the Vanguard FTSE All World UCITS ETF, which is a ticker symbol of VWRL. It's got an annual expense of 0.22%. There is also an accumulation one, which has the same name, but you're looking for the ticker symbol VWRP. Now, very strangely and quite sadly, this one's not actually available to invest in on Vanguard's website directly, but it will be available on your other brokers and other platforms. And I've just checked now as well that it is available on free trade and there isn't one behind their paywall, so you can invest in this for absolutely no cost at all other than the ongoing charge for the fund. And of course, if you do want to open a free trade account, if you want to use one of my links below, we'll both get a free share up to £200. So it's a bit of a no-brainer. So follow that link below and we'll both get a free share. Now, as promised, just to balance things up, there's another global fund I'll look at which uses the MSCI index, and I'll put this on screen now. What we're looking at here is the iShares MSCI ACWI UCITS ETF. This one is an accumulation fund. The ticker symbol is SSAC. And we've got a super low fee here of 0.2%. So again, just search for SSAC on your favorite broker platform. And of course, this is a great all-world fund which tracks the global market, which will have thousands of shares inside of it, which means you'll get a very small slice of all those different pies and pure global exposure. And now finally onto the emerging market section. So as I've mentioned before, the key thing about FTSE or MSCI, the different indexes which track these markets, FTSE has promoted South Korea to become a developed nation, whereas MSCI has South Korea as an emerging market. Now, of course, there are some other nuances as well in different other countries, but this is quite a major thing because if you think about South Korea as a market, there's some huge players there. And of course, whether you would agree whether it's an emerging market or whether it's a developed nation, you've got massive companies like Samsung here, LG, etc., who are all already huge global players. But either way, it's worth knowing because of course it does change some of the way they weight these things, so make sure you're aware of it anyway. Anyway, just like in the last section, we'll give you some options for the FTSE and we'll give you some options for the MSCI anyway. So I'll put on the screen now the first one. So what we're looking at now for emerging markets is the Vanguard Emerging Markets UCITS ETF. This has a ticker symbol of VFEG. This is your accumulating fund. And then we have the other one, which is the Vanguard Emerging Markets UCITS ETF, which is your distributing fund. And this ticker symbol is VFEM. Both of these again are 0.22% in ongoing costs, so very, very low when we compare it to some other managed funds, for example. And when you look at emerging markets, you may think there's a huge potential over the next 5-10 years, so you might want to get some exposure here. So when developed nations are not doing so well, we could get some amazing growth out of emerging markets. And now let's jump into MSCI. So we've got a couple of options here as well. So firstly, we have the HSBC MSCI Emerging Markets UCITS ETF, which is a ticker symbol of HMEF. This is a distributing fund with 0.1% fee. And then also we have the iShares MSCI Emerging Markets UCITS ETF, which is an accumulation option. The ticker symbol here is SEMA. Just to confirm the fees, on the HSBC option, we have 0.15%. The fees on the iShares is 0.18%. So there you have it. Honestly, it could not be any easier today than it is to invest compared to many, many years ago. All you have to do is a couple of clicks and a couple of mouse moves on your computer, a couple of taps on your phone, and you're invested in the world. Of course, as an investor and looking at all these cheap funds, that's just really the first step. But sure, it's great having all of these options and all of these flavors available to you. The key thing is now working out from your perspective where you are on your investment journey, what you're looking for, whether that's growth, whether that's income, where you think that growth is going to come from, whether you're just going to invest in the world or whether you're going to build that portfolio yourself. But either way, funds are a great way to do that because they give you exposure at a very, very low cost. And one thing we all know as investors, fees and charges add up over the years, especially if you're a long-term investor, so keeping those fees low is extremely important. Anyway, if you want to look at some of my other videos, I've done quite a lot of work on how I'm building up portfolio in Vanguard, for example, and then also I have done another video recently that shows you how I've built my current stocks and shares ISA in Vanguard. So go check them out, but I'll put the links up here and I'll put the links in the description as well. But hopefully they'll point you in the right direction, but please make sure, as usual, you do all of your own research. Anyway, I really hope you found the video useful. Please drop me a big fat like if you have. Subscribe for more. I'll see you in the next one, and happy investing.